Welcome to Money Minimal, where we make wealth building simple, sustainable, and stress-free. If you've ever wondered how credit scores actually work without all the confusing jargon, you're in the right place. Today, we're breaking down credit scores in a super simple way. No complicated terms, just the real deal. Let's get into it. First up, what is a credit score? Your credit score is a 3-digit number that tells lenders how risky or trustworthy you are when it comes to borrowing money. Think of it like a financial reputation score. It ranges from 300 to 850, and the higher the number, the better. So, why does this number matter? Because it affects almost everything related to your finances. Whether you get approved for a loan, what interest rate you pay, even your ability to rent an apartment or get a phone plan. Let's break down what actually goes into your credit score. Credit scores are mostly based on 5 key factors. Let's go through them one by one. First and most important, payment history, which makes up 35% of your score. This is all about whether you pay your bills on time. Late payments, collections, bankruptcies, they all hurt your score. So paying at least the minimum payment on time, every time, is crucial. Next is credit utilization at 30%. This is how much of your available credit you're using. For example, if you have a $1,000 limit and you're using $900 of it, that's 90% utilization. And that's not great. A good rule of thumb? Try to keep it under 30%. Under 10% is even better. Then we have length of credit history. That's 15%. Basically, the longer you've had credit, the better. That's why it's usually a good idea to keep your oldest accounts open, even if you don't use them often. Fourth is credit mix at 10%. This means the different types of credit you have: credit cards, student loans, auto loans, a mortgage. Having a mix shows lenders you can handle different types of debt responsibly. But don't go out and open accounts just for the sake of variety. Only borrow what you need. And finally, new credit, also 10%. This includes how many new accounts you've opened recently and how many times you've applied for credit. Every time you apply for credit, there's a hard inquiry, which can slightly lower your score. So try not to open a bunch of new accounts at once. All right, now that we know what goes into your score, let's answer a few common questions. How often does your credit score update? Credit scores usually update once a month, depending on when your lenders report to the credit bureaus. So if you pay off a big chunk of credit card debt today, it won't show up immediately, but give it a few weeks and your score will reflect it. What is a good credit score? Generally speaking, 300 to 579 is considered poor. 580 to 669 is fair. 670 to 739 is good. 740 to 799 is very good. 800 plus is excellent. But don't get too obsessed with the number. What really matters is that your credit is improving over time. How to build credit from scratch. If you're just starting out and have no credit history, don't worry. We've all been there. Here are a few ways to start building credit. Get a secured credit card. You deposit money as collateral and use it like a regular card. Become an authorized user. Ask a family member with good credit to add you to their card. Use a credit builder loan. Some banks or credit unions offer loans designed to build your credit. Pay all bills on time. Even things like rent or utilities, with services that report them, can help. The bottom line? Your credit score is just a tool. It's not a measure of your worth, but it is something you can take control of. Pay on time, don't max out your cards, be patient, and over time, your credit will grow.
Like this, subscribe to Money Minimal for more simplified, clear money tips. Thanks for watching.